Bloomberg's Hans Nichols and Scott Landman breaking the news last night that San Francisco Fed President Janet Yellen is President Obama's choice to be vice chairman of the Federal Reserve. Our economics editor, Michael McKee, is here with more on why and what it may mean, more importantly, for monetary policy. Mike?
Well, you know, I was one of the people who was wrong, who didn't think she'd take a pay cut of more than half, which is what Janet Yellen is going to have to do if she indeed takes the job. She hasn't yet been nominated. They're waiting for her background checks to be done. But that's why she's being nominated, because she is a known quantity. The background checks aren't going to turn up anything. She's been confirmed as a member of the Fed Board of Governors. She's been the chairman of the Council of Economic Advisors. Going to be an easy sail through Congress, and they need to move fast because Don Cohn leaves the Fed Board in June.
Mike, let's talk about Janet Yellen's, not just her resume, but what does Janet Yellen as a policymaker bring to the Fed?
You know, the vice chairman has few official duties, although practically it's turned out that in the past couple of years, they've become managers of the Fed's day-to-day business. They spend a lot of time dealing with the payment and settlement systems and the other things that the Fed does. But she's also a very well-expected economist, and the Fed has a tough job ahead of it trying to get out of its extraordinary policy moves. So she's someone who is acceptable to Democrats and acceptable to Republicans, a known quantity. She'll help Ben Bernanke.